Why are gold prices going up? Gold is a really unique commodity in that it's not dictated by other commodities price action, like, crude oil with inventories, supply and demand, and these different geopolitical risks that are closing off production in certain parts of the globe. Gold is a commodity, but it trades a lot more like financial instruments a lot of the time, like a flight to quality, like a bond market. It can be similar to at times. In the last little bit, though, the last day or two, it's been trading more like a stock market. And we're going to cover, this identity crisis that gold seems to have, where at different times it can be correlated to other commodities. It can be correlated to foreign exchange markets, or for the time being, it seems correlated to stocks, because gold has made it back to $2,000 amid precious metals rallying on the whole, due to, as far as I can tell, lower inflation readings here this week in the US and lower potential interest rates. Historically, gold is a hedge against inflation, one that people are buying when they're fearful that inflation is on the rise. But obviously, this isn't the case here, given that we just printed the lowest inflation that we've had in over a year, and gold, off of that news, rallied. And then today, 24 hours later, as it further digests this new inflationary environment and interest rates being lowered here, gold is taking that as bullish news, similar to what the stock market is doing. And the correlations between gold and the stock market go back and forth. You'll remember that, we'll get into this here in a second, but in mid 2020, when stocks were recovering from that pandemic sell-off, gold was also rallying with the stock market, even though there was no inflation to be had there last year. As inflation is ripping to the upside, gold is rallying on that fear. Now, with inflation coming off, gold is rallying again. It does its own thing. It can be correlated to these different markets at different times, but I want to dissect a couple of these moves in particular, and then hopefully conclude how we can treat gold in the future, because this is rarefied air, uncharted territory for gold, that there isn't really a roadmap for. During gold's last run to 2K, we were seeing inflationary prints get above and beyond where the Fed likes to keep them, around 2%. We were getting up to 4 or 5%, and we peaked in the middle of 2022. And actually, gold was already coming off at that point. But a lot of that is because, gold will rally as a hedge against inflation when people are fearful of inflation rising. If, interest rates are still low and people are worried that inflation is going to get out of hand. But during the middle part of 2022, the Fed was aggressively hiking interest rates, and that just under the premise that hiked interest rates will bring inflation lower, brought gold lower, at least the demand for gold, that fear bid that it saw early in 2022 dissipated amid interest rates rising there. And you'll start to see some of the kind of counterintuitiveness to the most recent rally in gold. And if you search for, why gold is rallying this week, the headlines will say it's because lower inflation, lower interest rates. And it's like, well, what the heck, man? I mean, we were rallying off of inflation rising in the early part of 2022. So what's happening here? What's going on? To be fully aware of that, I want to take you back a couple of years further to the middle of 2020, when the pandemic fear brought a little bit of a bid into gold. And they started to look at different odds of Fed interest rate hikes at that time, but hadn't started to hike then. A really interesting time for gold there in 2020, because this wasn't actually happening, this run up in gold, when the pandemic fear was at its peak in March and in April and May of 2020, when stocks were sinking, actually gold moved to the downside. You can see that blip there to the downside with stocks early in 2020. And then as stocks recovered, and you'll remember made all-time highs again by the end of 2020, that's when gold was getting up and above $2,000. So you see the three different points that we've highlighted in gold's price over the last 3 years of price action. The first one, we're making highs in gold above $2,000 with the stock market making highs. The second one, we're making highs in gold as the stock market is moving lower and inflation is on the rise. And now this third one, we're seeing gold make highs as stocks are bouncing back up 2% here today, and inflation is back lower. So what are we really looking at here with the upside in gold as we try to explain it away? Because to me, from where I'm sitting, one of these has to be right and the other one wrong. Because if the stock market is doing well and we're bouncing back here and, inflation is calm, but interest rates don't have to necessarily rise so much to the point where stocks are being hurt like they were last year, then why would there be such demand for this precious metal that's either an inflationary hedge or, a flight to quality, whatever you want to call it? And I think that it's because though we're seeing this short-term bid in the stock market here coming off of the lower interest rates and the projections for interest rates to be cut by the end of the year, given these lower inflationary readings, gold is rallying almost as a hedge against if inflation, really falls out of bed and the Fed has to cut rates quicker than currently anticipated, and we see some further economic turbulence. People want to own this gold, and there's obviously a demand for it as we're above $2,000. So it's weird to almost think about the fact that stocks are rallying here with the potential of selling off in the long term. And of course, if the stock market actually does just fully regain its footing, everything is chugging along well, interest rates don't have to be cut so quickly, we don't have an economic downturn or anything like that, but they do come lower and lower over time as the Fed would like it over the next several months, then you'd expect gold to give up some of this ground. But if the short-term bid in stocks is short-term and, the lessening inflation becomes, potential deflation and some potential, people not wanting to spend any money and an economic downturn here, then stocks might turn over, and this gold, you'll see why it was rallying there. But for the time being, we have this stock market and gold market rallying together. But as you can see, when they did so in the middle part of 2020, stocks ended up moving on through all-time highs and gold gave up that ground. It's just not sustainable, historically speaking, that gold and the stock market rally together like they are currently. At some point, one of them has always given up ground, and likely this is going to be the case here as well at some point here in 2023. If gold makes another step to 2100, 2200, I wouldn't expect that to be occurring with the S&P or NASDAQ getting back to all-time highs. I think that would be because of some fear that we're seeing in the stock market. It'll be really interesting to see how those two pan out. At the end of the day, though, trying to draw correlations between inflation, interest rates, stocks, and gold here can be tough. I mean, if you look at the long term for this gold market, it is truly quite unique, and there's not a lot of correlation that you can put, which makes it an attractive product in its diversification here that, Yeah, if you own, I mean, if you're trying to diversify and you own some stock and then you want to buy some gold because you're afraid of this, that, and the other, what have you, you want to hedge against inflation, or you are, fearful of an economic downturn, you don't want them to move together. It might feel good now that, I bought stock and I bought gold and they're both moving higher. But the whole point of diversification is risk management, is a hedge that if they both turn over then and they both sell off, a month from now, a year from now, that's not a hedge. That's not diversification here. And that being said, historically, this is a diversified asset. And that's what the point I'm making, I suppose, is that at some point they will not be moving together. One of them is likely to come off, probably at the expense of the other one's optimism, I guess. So where does that leave us here? Well, all those stories aside, all the macroeconomic pieces and everything else, you look at the price action, and I'll be damned if I don't bring up the fact that $2,000 gold has been the high several times historically, going back to, gold's peak after the financial crisis, the peak occurring in, 2010, 2011, got up close to 2,000, came off. We just highlighted the most recent occurrences of this in 2020, got up to 2,000, came off. On inflation in 2022, got up to 2,000, came off. We're here again. And I wanted to give you also the data from the 90s into the early aughts, because gold can make these jumps, right? Like it can jump from a triple digit product to quadruple digits. It can jump from trading in the 1,000 to 1,300 range to 1,500 to 2,000 range. It can make this jump to a new normal. But historically speaking, it has always come back. And it's always interesting to me, because we try so hard, with the education and everything that we put out there to not get people to focus on some big round arbitrary number. But it's really hard to not look at 2,000 and the fact that this market has bounced right off of that level. And every time it's gotten up there, it's only traded, a couple weeks or a month or two at most above $2,000. So this will be a really interesting piece here in gold that is, for the time being, positively correlated with stocks. At some point, one of these will give.